All right. Well, good morning, everyone, and welcome to our November edition of our small business webinar series. Couple of kind of background notes before we get started today. Please feel free to send in any questions you want in the chat window at any time through the presentation, and I will pass those on to Stephanie when we get a break in the presentation, and anything that we miss we'll catch at the end of the presentation. And then at the end of the presenters talk to, we will invite you, if you'd like, to unmute yourself and you can ask any questions audibly that you want to as well. So, or continue to ask questions via the chat window. So I will encourage you, if you do use the chat window, to send that either to myself, Joel Schumacher in there, or to hosts or everyone, as opposed to just our single presenter, so that I can make sure that I can monitor all the questions and pass them on to our speaker here today. So with that, let me introduce today's speaker. So today's speaker is going to be Stephanie Cummings, and she is a senior business advisor for CardConnect. And a little bit of background on her: she educates and offers solutions to her clients' needs, which I believe is different among our different clients that she deals with. And her philosophy is really to advocate, educate, and always be transparent about that process. And she's been in the financial technology industry for about 12 years. And she shared with me yesterday that she's also a prior teacher, so I think she can handle a classroom like this one that we've got here today. And she was the 2015 winner of the Allied Member of the Year by the Montana Lodging and Hospitality Association, and she is a native Montanan. And the interesting side fact for today is she loves to play pickleball. So with that, Stephanie, I am going to turn it over to you.
Great, thank you. Appreciate it, Joel. Just the first screen here is just showing my contact information, and you'll see it throughout. I encourage you to take notes of questions that you might have, so that I can get those addressed and answered, even if we do it at a later date, where I respond via email to you, so we can get everyone's questions answered in regards to understanding credit card processing. So welcome, everyone, and appreciate the opportunity, Joel and Jason, to present here today. So I'm going to go ahead and get started. And just a little bit of background. As Joel mentioned, I'm born and raised Montana. I graduated from Montana State University. I was a teacher. Unfortunately, I couldn't afford to be a teacher. I was a pharmaceutical rep for a few years, and then I got a wild hair to become a business owner. Learned a lot of tough and hard lessons being a business owner. And for the last 12 years, I've been in the financial technology industry. So I'm a member of a couple different associations across the state and very involved in my community. So just a breakdown of really what CardConnect does is they're a payment processor. CardConnect is a First Data company, and First Data is now Fiserv, which is the largest financial technology company in the world. I hope to not be able to talk anything more about CardConnect or Fiserv throughout the rest of the presentation today. This is more of an educational and FYI, just trying to get a grasp and understanding the complexity of credit card processing. So I hope to not mention CardConnect too many more times. We also offer software integration, which is working with software developers to have that direct integration with the software and point of sale systems, property management systems out there, which is a very unique offering. It's not something every processor can offer. And of course, then gift marketing. I spend the majority of my time consulting and prospecting with new clients. I'm managing my current portfolio of business, and then working with association relationships and networking partners. And I will always advocate for my clients. That's something that is not typically done in our industry. For those of you who are on the call today, if you have any experience with credit card processing, it notoriously has a very unethical reputation. And after you participate today, you'll probably understand a little bit more of why that occurs. So I have a diversity of a portfolio of business. I have clients over a variety of states. Most, if not all, of these business relationships I have originated in Montana. And I do travel, and I enjoy that aspect of my job. So as you can see, on the left-hand side here, a number of different industry types that I work with. And It provides a wealth of knowledge in an industry that too often does not offer customized solutions for the different types of industries out there or verticals out there. So, all right, so getting into the agenda today, I'm just going to review and go over the complexity of the industry, the role the card associations play, what true interchange is, a brief mention of what interchange optimization is, the role that banks play in this, what is an effective rate. It's a very simple equation that you can utilize to help manage your business and understand whether or not you're being priced fairly, what's new in our industry, and then just a couple of final thoughts. So I'm going to go ahead and get started. The complexity of our industry starts with the fact that credit card processing is an unregulated financial institution. And as a result of that, there's a lack of accountability. So if business owners have been burned or screwed over or have been taken advantage of by a processor or a reseller that's selling those services for a processor, there's really no one you can go to report to other than maybe the Better Business Bureau. I know that people have tried to report things to the Secretary of State, but there's really nowhere to go to hold people accountable. And as a result of that, that's where the abuse takes place in our industry, where business owners and businesses that take credit cards can get taken advantage of. So a big part of how that works is the fact that you actually, as a business taking credit card payments, do not pay the card associations directly. You actually deal with your processor, and the processor pays your fees on your behalf to the credit card associations. And where the discrepancies this is where it first starts to arise, is what is being paid to the card associations and what is being charged by your processor can be two very different things. Due to the lack of knowledge and education about our industry, again, that's just an opportunity for people to get taken advantage of. And I really feel that if you know to ask the right questions, you can avoid a lot of those issues when setting up credit card processing for your business or association. So just a little tidbit, if it sounds too good to be true, it usually is. Oftentimes I get current clients that will call me up and say, someone came in and reviewed this and they told me they can save me like $10,000. Well, they could do simple math and see that they're not even paying $10,000 in fees a year. So I'm not sure where the $10,000 of savings is coming from. But if it sounds too good to be true, it is. And with my clients, if they ever get someone to come in and review their credit card processing, which I encourage all businesses to do, it's something that should be done on an annual basis because of the type of increases that we see in our industry it's a common practice, that you should have your credit card processing reviewed at least on an annual basis, and make sure that you're working with someone that you trust is extremely important as well. And we'll get into more details about that later in the presentation today. So there's a couple key differences here amongst the card associations. And when I reference card associations, I'm referring to Visa, MasterCard, Discover, and American Express. So Visa and MasterCard do not issue cards themselves. Banks have to pay annual membership fees to the card associations to be able to put a Visa or a MasterCard logo on their credit or debit cards that they're issuing. And Visa and MasterCard is making the majority of their revenue in this business relationship, from the annual membership fees that the banks have to pay, in addition to the 15% that they get from the interchange fees that are being charged by the card associations. The other 85% of the fees of interchange that are being charged are going back to the issuing bank. Hands down, credit card processing is the largest revenue stream for all issuing banks. And again, when I mention issuing banks, that's a bank that's issuing a credit or debit card to their consumers. American Express and Discover took the bank out of the equation. They issue their own credit cards, and as a result, then they receive 100% of the fees that are charged on interchange. So what's very important here is that the card associations are the ones that actually control the rate at which the card is processed. And there's multiple types of card types, which equates to multiple types of rates being charged on interchange. I don't know if people can pipe in, but of those on the call today, please respond to the chat and let me know if any of you know what the interchange table is or if you've ever heard of it. If not, I can further on in the presentation, I'll be able to share some additional information that will provide some insight to that as well. But so just real clear here, Visa and MasterCard don't issue cards. They're issued by banks, and banks have to pay annual membership fees to be a part of those associations. And then American Express and Discover issue their own cards. So they remove the bank out of the equation. All right, so Visa was the first to the market. Visa and MasterCard both came out in the early 1960s. And there was one card, one Visa and one MasterCard. And it was the back in the day when you used to have the old knuckle busters, or you would slide the card on a piece of carbon paper in the little machines that would sometimes rip the knuckles off of people because of the nicks and curves and crannies of it. And some businesses still have those knuckle busters because when the internet goes down, they can still use them to be able to take payment and then key in the transaction at a later time. But at any rate, Visa controls the most of the market. Visa issues 60% of the cards that are used are Visa cards, 30% are MasterCard. American Express holds 8.5% and Discover 1.5%. So as I mentioned earlier, the card associations control interchange. They control the rate at which the card is processed. Interchange is not negotiable. Everyone that processes credit cards pays interchange fees. Again, how it's being then passed on and paid by the processor to the client can be very different, and that's where we start to see a lot of discrepancies. And I just listed an example of what an interchange rate is. If you pull out your statement, you might see a card type saying Visa, CPS, Retail, and it processes at 1.5%. So those are just some examples I've shared for you there. Something that's not really new, but probably more businesses are aware of it because they may be being charged fees for it. But PCI compliance has been around for at least 10 years. And it's controlled by the card industry. It's a council made up of manufacturers, processors, card brands, and security experts from the payment industry that set the standards to ensure that businesses are practicing and processing secure payments and using secure networks and applications when it comes to taking payment. PCI compliance is something that has to be done on an annual basis. It's an annual certification, and based off of the type of business you are, how you're processing transaction determines which questionnaire that you have to complete. And if you're not PCI compliant, this is something that's fairly new within the last 2 years in our industry. The processor now has to provide proof to the card associations that every one of their clients is PCI compliant. And if they're not, the processor gets charged a fee or a fine, if you will. They are now passing on those fees on to businesses, and some of them are reasonable, like $19.95, $29.95, and some of them are very unreasonable. There are some processors out there in the industry that when you're non-PCI compliant are charging as high as $125 a month for not being PCI compliant. It's important. It's something that needs to be done. It needs to be done correctly for the type of business that you are based off of your SIC code. And it's extremely important to make sure that when you're completing the PCI compliance that you're asking or answering the questions correctly to ensure that your type of business is following the security measures in place to be PCI compliant. If you're using a point-to-point encryption device, you no longer have to do the scans, but oftentimes a lot of the issues around PCI compliance is businesses are failing the quarterly scans if running on internet, and the annual scan if you're still running your terminal on a phone line, which is not something we see very often anymore, but there are people out there that are still processing their credit card terminal on a phone line. It's actually more secure. You can't hack a phone line where you can hack an internet line. So maybe some people are still doing that as a result from security reasons. So how to avoid the fees being charged by your processor is to make sure that you're completing the PCI compliance. Our industry as a whole has not done a good job of educating and providing knowledge to their customers about what PCI compliance is, and nor are they assisting you in getting it done. And this is something where a prime example of how I advocate for my clients. I help and assist every single one of my clients in completing their PCI compliance and monitor a daily report to ensure that they're never non-compliant to help avoid those fees. And it is important from a security aspect that you are doing the PCI compliance. An example of that is having a firewall to protect, against someone accessing any type of potential information that you wouldn't want them to have. In credit card processing, in the world of credit card processing, that's something that's a threat. Anyone can be at a threat for a breach. They can be hacked. They can experience identity theft. So it's extremely important, if you haven't or do not know that you have the securities in place, that you are processing secure transactions. Any questions yet in the chat box, Joel?
Nope, no questions yet.
Okay, so getting right back in here with true interchange. So interchange, as I mentioned, is the rate at which the card is processed. It's overseen and controlled by the card associations. And there's over 700 different types of cards issued. So if there's 700 types of cards issued, that means there's over 700 different rates affiliated with them. So sometimes, occasionally, I'll go into a business. I don't see it near as much as I did, 10 years ago. I'll go in with, working with a prospective client, and they'll ask me what my rate is. And I'll ask them for which card, and they get a really confused look on their face. And they honestly think that they're paying one rate. Now, there are flat rate programs out there. And what they basically do with those flat rate programs is they have an algorithm that confirms or figures out what the average rate it is that that type of business is using or paying for. And then they add a little bit of padding or profit into that, and they charge you one flat rate. And a good example of that is Square. Square is a unique aspect of our business. They're not actually a processor themselves. They're an aggregator. And what that means is they themselves are actually the merchant account, and all the businesses that utilize Square underneath them are a terminal ID. And that is something that's, again, fairly new in our industry. Prior to Square, that was something that the card associations did not allow in our industry. And so you're seeing it a little bit more and more. Stripe is another one that is using that business model. And the reality is that Square is right for the right customer. I don't recommend it for all businesses. And a good fit for Square is, an example would be a coffee shop, someone that has a low average ticket and multiple transactions. That is a good business type that benefits from the business model that Square is using. And I've recommended it to businesses that I think it's the best solution for them. Because when I sit down and work with a prospective client, I come in and I consult. If they're a new business, I do a little more educating so they can make the right business decision. But if they're an existing business that has current processing in place, I audit and review their statement with them, show them how they're currently being priced, and provide the knowledge that I'm sharing with you guys today of how our business model or how the processing model works, and to make sure that they're being priced fairly, and then offer customized solutions that it's going to best fit their needs. And then with that information, they can make an educated business decision. And sometimes that business decision isn't me. Sometimes I'm not the right solution. But working in the industry, being a previous business owner myself, it's very important to me as a professional to make those right, suggestions and recommendations to what's going to be the best solution for the business, and they can then make an educated business decision. So getting back to true interchange, as I mentioned, businesses do not pay card associations directly. The processor that you're utilizing, so CardConnect is the processor, we're actually paying the card associations on your behalf. And then we are in turn charging you what we paid to the card associations. And that is when I talk about true interchange. It's transparent, it's disclosed, you know exactly what's being paid to the card associations on your behalf. And then on top of that, you have a processing charge. And interchange is not negotiable. Your processing charge is negotiable, and it's based off of, or it should be based off of, the volume that you're processing. Just like if you're buying in bulk, the more you process, the lower your processing charge should be. Pretty simple. Our industry uses a financial term of basis points. I hope someone on the phone call today is familiar with what basis points are, but if you're not, I'll just break it down pretty simple here. As I mentioned, it is a financial term, and the easiest way to understand it is 50 basis points is 0.5%, or 100 basis points is 1%. So when you see it written on your statement, you'll often see what you think is something that's even less than 1% because of a simple movement of decimals. And so if I were to read this on a statement, I would think that this would be less than 1% if I didn't know that on your statement they're putting it in the form of basis points. And where it gets confusing is they actually interchange basis points to percentages on statements, and it's very hard and difficult and often Greek to read a credit card statement if you don't know how to read it. And that's where I think a lot of businesses, CFOs, bookkeepers, accountants, who's ever looking and reviewing and reconciling those statements, they kind of struggle. It's hard to understand them until someone can point out, what to look for and how to read the statement. So it's extremely important to understand that so that you can understand and read your statement and know how you're being priced and if you're being priced fairly. And as I mentioned earlier, processing charges are negotiable. It should be based off of volume, and true interchange is not negotiable. Everyone has to pay it. All right, so interchange, how is it affected? It's affected by the type of business that you are. So for example, if you're retail, restaurant, lodging, each one of those businesses, I could use the same credit card or debit card at those businesses, and they each have a different rate by industry type. And then other variables that affect the rate at which a card is processed is if it's card present. So if it's swiped or inserted, or contactless payment when card is present, or if it's keyed when it's payment over the phone or something online, that can impact the rate at which the card is processed. And then of course, the type of card, whether it's a debit or check card, a rewards card, signature card, corporate cards, those business cards that are out there are going to have higher rates. So interesting note, I often ask businesses when I'm sitting down and working with them if they know who pays for the fees on all those rewards and frequent flyer mile cards. And the answer is you as the business. When you accept a credit card payment and I have a Delta frequent flyer mile, I get those frequent flyer miles because you're paying a higher rate on interchange for that card type. And that's why you've seen in today's world all these large corporations like Cabela's and Home Depot and Target and Macy's and anyone else that has now their own credit card that they're issuing. And they are, when you walk in the door or when you fly on Delta or any other airline for that matter, they're really promoting and pushing you to sign up for one of their card types because they now are in a business relationship with a bank and they're sharing that revenue stream of the rate on interchange that's being paid and the fees. And it's a large revenue stream. So for example, Cabela's makes more money on their Cabela's Visa issue card than they do in all their retail stores combined. It's a very big business. A lot of money is made in this industry. And so it's just important. I like to share that with people that they're aware of and how all that works. And when you accept Visa and MasterCard, you cannot discriminate. You can't say, well, I'm going to take one Visa but not another. And so when you accept one, you have to accept all. You do have the option. Some businesses don't want to take American Express or Discover. Typically the case in those situations is they feel or the business owner thinks that the rate on those cards are higher. And at one time, for sure, American Express did have a much higher rate, but they are very competitive in the market now. And there's actually a slide later in the presentation that breaks that down. So this is just a screenshot of a very small portion of the interchange table for Visa, and it's just giving you an example. On the left-hand side, you can see the type of card. So this is a Visa supermarket debit card and the rate at which that card processes. And you can see it's different from retail to fuel to small ticket to restaurant. This is the exact same card, and these are the different rates that it's charged when used in different businesses. Regulated debit is something that came about in 2011 with the Durbin Amendment. And that has really, it changed for a positive in many instances. It was the first regulation implemented in our industry where Congress got involved and regulated a rate on the interchange table. So it's impacted by banks who issue Visa credit or debit cards, well, in this case, a debit card, that have $10 billion of assets or more, that rate on interchange is now 0.5% or 5 basis points. And prior to the Durbin Amendment, the lowest rate on interchange was 99 basis points, so just right under 1%. So this is if passed on correctly, this is a significant saving to businesses if they are set up correctly and they're being processed and paying true interchange. So this is an example of where if Square has a flat rate and they're charging, I believe currently it's 2.75% and a transaction fee. If someone were to come in and use a regulated debit card, so let's say it's a Wells Fargo debit card, Square is actually paying the 5 basis points and it's actually 22-cent transaction. That's interesting that it has 21 and an asterisk there, but it's 22 cents for the transaction fee. That's what Square is actually paying to the card associations, and then they're turning around and charging you 2.75%. So on regulated debit, they are making a lot of profit. They're probably losing money when a corporate card is being used that processes at 3.25%. So they have figured out an algorithm that again balances what the average credit card rate is, and that's their business model. And they've had to make some adjustments. The first 5 years Square was on the market, they actually were losing money because of their algorithm, because these technology experts that thought they'd come into the credit card processing industry didn't take into consideration is the amount of variables that play into the rate at which a card is processed. And as I mentioned, I'm going to go back to a previous screen here. These are just a couple of the things that affect the card type. They didn't take all into consideration that retail was different than restaurant, that it's different if you swipe versus if you are keying it over the phone. And it's different based off of the card type as well. So they have had to adjust their algorithm to be a little more competitive in the market and be a profitable company. Just kind of a little FYI there. I think that's interesting. I set up the majority of my clients. I do have a couple on flat rate, and it's because the client is requesting it. I like the clients to see exactly what's being paid to interchange, so it's transparent and they know exactly what they're paying for. So I typically set most of my businesses up. 98% of them are on true interchange plus pricing. So the next screen here is just a snippet of the complexity of our industry. This is an example of a current client's previous processor's statement. And I have two areas highlighted here. I have the Visa CPS restaurant debit card highlighted, and I have the Visa Earth 1220. Earth is, it means an error has occurred when the transaction has processed, and actually downgrades the rate at which a card's processed, and it charges it at a higher rate. So if you're seeing IRF on your credit card statement, you may want to reach out to me to have me at least evaluate it to see if we can uncover why you're experiencing an error. And it could be that when you're keying in a transaction, you're bypassing the address verification when it's prompting for street number and zip code to the billing address on the card. If you bypass that, you have the risk of the card actually downgrading, and that they're going to charge you a higher rate on interchange because you bypass that process. But the reason I have the example up here today is I just want to show you the complexity of a statement and how easy it is to pad or insert profit, which processing companies do, unfortunately, when clients are using them for their processing needs. So the first highlighted item here is Visa restaurant debit card. You'll see that they had 948 transactions totaling $55,663.64. And the fees that they were charged on those transactions was $761.45. So you'll see in the next slide, but I've put it up here, that Visa card, that type of Visa debit card processes at 1.19% plus a 10-cent transaction fee on interchange. So I simply take, to confirm that they're being priced fairly, I simply take the transaction fee times by the number of transactions. So that's $95.80, right? Subtract that from the $76.45. And then I simply take the remaining dollar amount and divide it into the volume. And that comes up and shows me that it's 119 basis points, which equals 1.9%. So this is when I'm auditing a statement. This is where I start. I go through and I start crunching the numbers on the type of cards that they're accepting and ensuring that the processor is charging the correct rate on interchange, because oftentimes they can pad fees, and you'll see this in the next item. So I'm going to go to the next slide, and you'll see that this is the exact same screen that I have on the next slide, but I also have a snapshot of the earth rate on interchange. So this is the exact same statement, just a few line items down, and their Visa earth transactions, they had 496 of them, processed $30,626.98, and the fees were $909.29. So again, I do the math, I take out the transaction fee, remaining dollar amount is $859.69. I divide that by the volume of the processed of that card type, and it comes up with 280 basis points, or 2.8%. So this particular line item in the statement had a padding of 40 basis points, so almost a 0.5%. And if you start, this is 1 month's volume. If you times that by 12 and add 40 basis points, they are being overcharged by 40 basis points on those transactions every time that card type is ran, or in this case, when it's earthing, which is an error, and they're paying more than what they should be. That's an example of the complexity of our industry, where because you don't know how to read your statements, you're not sure what you're looking at, processors can and do pad and add junk fees and excessive fees, and you have no way to question it or know whether or not it's something that's legitimate or not, unless you're working with someone like myself that can come in and audit those statements and be transparent and educate you and show you what it is that you're paying for. So oftentimes, if anyone is on the call today that you've been in business a number of years, you've had a number of processors over the course of the years, I would suspect that you've probably been told when you have changed processors that they can save you a significant amount of money, which is probably a true statement. But what they do is you get these annoying phone calls, multiple sometimes a day, asking, questions to pique your interest, to see if you'd send them your credit card statements so they can see if they can save you some money. And what they're really wanting is to look at that statement to see how you're currently priced, and yes, to come in lower than what the current processor is charging you, but really not going to educate you and take the time to show you how you're being priced, where the discrepancies are at, to allow you to make an educated business decision. And they'll save you money initially, but over time, I'm going to go back to a screen here. I didn't mention this earlier. Every April and October, the card associations review the interchange tables, and they can make changes. They can increase rates, they can decrease rates, they can add card types, they can delete card types. So when the card associations do that, it's a very common practice in our industry, very unethical common practice in our industry, for the card associations to make those changes, and then the card processors will send out a message to you, usually on your statement, because they legally have to notify you, that due to the card association's increases, that they're now passing on those increases to you. And what they've done is they've legally just informed you that they're going to increase the processing charge. And newsflash, you've already had the interchange charges have already been passed on to you from the increases by the card associations. So it's not a loophole, if you will, but it's definitely a nice excuse for the card association or the card processing companies to legally inform you that they're increasing your processing rate, and you, because of the verbiage and the wording that they use, you're feeling like it's not even an option, that it's something that the card associations are doing, Visa, MasterCard, American Express, and Discover, that they're passing on an increase, and you're forced to do it to continue to take and process credit cards. I did see a question pop up, Joel.
Yeah, and that's great. Yeah, I think it's about the refund fee, the IRFA fee.
Okay.
Is that an error when the card was run, or does that when a refund was processed back to that card?
No, it's actually it's when it's ran. And something to note, and this is extremely important as well. I'm glad she brought up a refund question. So when when an original transaction is ran, it's processed. Again, let's just use simple numbers. Let's just say it's processed at 1%. if a refund is ran for that original transaction, the card associations on Visa and MasterCard credit cards, not debit cards, credit cards, actually refund the rate on interchange back to the processor. Many processors don't pass on that refund rate back to the end user, the client. And so it's extremely important. If you run lots of refunds or more than average, you want to make sure that you're receiving the interchange refund rate when the refund is being made. So oftentimes processors, they run that, let's say they run a transaction for $100, it's at 1%, that's $10. They refund it, excuse me, that's $1. They refund it. You're not refunded the dollar. They actually make it look like it's another transaction, if you will. So they really have charged you twice for the initial transaction and then the refund. And so it's extremely important to be set up correctly. She probably has some additional questions about that with the refund, but no, an ERF is an error of when the original transaction, something has caused an error in the way that whether it be keyed, and usually the most common one is when people are not putting in the address verification. I mean, there are other instances when transactions are ERF or there's an error, but also keep in mind, because of the way that the business model works and processors are the ones that are actually passing on the fees to you, they can set up your account because of the business model they're using to make it look like you have way more ERFs than you do, just to make it's a way to pad profit into your account. So a business that has a lot of ERF definitely needs to be looking at what's causing that. And if you work with someone that you trust and is educated and knowledgeable about our industry, they should be able to uncover why a transaction is ERFing and be able to hopefully rectify and fix it so that moving forward, those transactions don't have that error. I saw another a question pop up and I didn't have a chance to read it.
Oh, it's actually it's a clarification on what you're doing now. So I'm going to ask this to you. Could that error be caused by like a card read error, or if the card holder does not have enough funds in their account, or is it always something
No,
related
it
to
would
how it was
never be.
inputted?
It would never be if they didn't have enough funds in their account. It could be. It could be something to do actually with the issuing bank. There, and sometimes, it's usually, like I said, it's usually related to either a zip code or a street number with the billing address. And so if it was it Charlie? Is that who asked the question? Is that who I saw? Yeah. Oh, Chaley. Have her email me directly and I can dive into that a little further for her and hopefully uncover what would be causing that error to occur when they're running those transactions.
All right. And also, just so you know, we'll post a PDF version of these slides with your email to our website. So if you didn't catch your email at the beginning, we will post it on the website so you can get that again as well.
Okay. So these last two screens that I shared with you, I just wanted to show you the complexity of how challenging it is to read your credit card statement. And unfortunately, the industry as a whole, I don't want to say that they're doing it intentionally, but they certainly are not going to make it easy for you to understand your credit card statement. So it's extremely important, again, to work with someone you trust, to be able to have someone that you can reach out to, a customer service, from a customer service aspect. And oftentimes, many people really don't even know much about their processor. They know that they have to accept it. And so in certain circumstances, some businesses, because of the software or point of sale system they're using, may be forced to process with just one solution. I discourage people from investing in that type of a system. When you're tied into a point of sale system or a software system that's going to force you to process with one processor, I can guarantee over time you're going to be increased and you're going to be paying way more for credit card processing than what you should. So that comes to the finals. One of the final slides in the deck here is asking those right questions. And oftentimes, I mean, business relationships exist across our industry. And one of the things I mentioned earlier that CardConnect does is we do software integrations. Usually the businesses that we're working when we develop those software integrations have multiple processors that they're working with to offer a diverse solution to their client base, so that if they're working with one processor and they're not meeting their needs or they're not pricing them fairly, that instead of having to change out their whole entire property management system, our point of sale system, our software system, that they can just utilize a different processor that they have integrations with. You can always, it's an extra step. I do have clients that do have proprietary technology, and were just fed up with the lack of customer service when it came to their processing, or they were being taken advantage of with being charged excessively. And so they run like a standalone terminal on the side and just have to key in that transaction into their software system or point of sale system. It's an extra step. Some businesses aren't willing to do it because, of course, we're humans, we make errors, and sometimes errors occur. Whereas if you have that direct integration and you swipe the card through your system, it's all incorporated and it prevents those errors from occurring. But it's a case-by-case basis, and that's why I offer the customized solutions to each client, because there's so many variables that go into each business type, and different verticals of how you're processing through a software or point of sale system. If you're using a standalone terminal, there's so many variables there that you really need to look at customized solutions for every client. Okay, American Express. I have a question. I hope they can respond quickly in the chat on this. I want to know if any of the people online today are not taking American Express transactions. Like they're not set up to take American Express.
We've got at least one saying they don't.
Hi, Kelly. I know Kelly, that's why I said that. That's funny. Anyway, American Express, back in the day, when it first came to market, it was 3.5% for restaurant and lodging. And that was the market they were going after. It was different for retail and other industry types. So American Express, again, back in the day, used to charge excessive fees, and businesses that don't take American Express, the reason they don't is because they think that that's still the rate that it's being processed on American Express. American Express has a new program out there. It's called American Express OptBlue, and you'll see a screenshot here. This is for retail. It's different for restaurant. It's different for lodging. It's different for B2B. It's different for manufacturing. The retail rates for American Express, they break it down into tiers. They have 3 tiers now. And then for retail, the threshold is for the first rate is any transaction in the retail market under $75 is going to process at 1.6% in a 10-cent transaction fee. You can see then the second rate is 75.01 to 1,000, and anything over $1,000 processes at the 2.4% rate. This American Express is very, very competitive now, if not even beneficial, especially for B2B manufacturing businesses. They're very competitive, and the dollar amount is much higher for, actually, I have it right here. Let me just, since we have an engineering firm on the line here, the manufacturing rate for B2B, the dollar amount range is $400 or less. It processes at 1.55. For 401, 401 to $7,500, it's 1.8, and anything over 7,500 processes at 2.25%. Many of the Visa and MasterCard business and corporate cards that are used now by businesses, I mean, some of those rates are up over 3%. So if you're not taking American Express, I strongly encourage you to look at accepting it if you're getting your clients asking if you take it. And here's why. American Express cardholders make higher than average incomes, and they spend more money, and they're very loyal customers. So if you're taking Visa and MasterCard, there should actually be no reason why you're not taking American Express and Discover. And that's 12 years of knowledge in our industry. Oh, interesting. Again, Kelly, if you want to send me an email and let me know who you guys are working with, and it may just be asking the right question to who you're working with, that you might want to be able to get set up for that. And I strongly encourage, if you are getting customers or clients asking to pay with American Express, that you consider it. Okay, moving forward. Okay, interchange optimization. This is not something that every processor can offer. CardConnect is in First Data, Fiserv is one of two companies, I believe, that offers interchange optimization, and it's patented technology, and it's only for certain card types. And for those of you who are on the phone, and this may directly reflect you, Kelly, when you're doing level 2 and level 3 processing, it's qualifying. There's only a certain amount of card types that qualify for level 2 and level 3, and it happens to be in the B2B and manufacturing wholesale side of our industry. Interchange optimization for business cards, corporate cards, and purchasing cards. Those are the only 3 types of cards that it impacts. And this is just a snippet of what those card types look like on your statement, like a MasterCard business debit, corporate purchase, fleet, level 1, 2, 3, and 4. And then Visa has it as a business tier 1, 2, 3, 4, and 5. I guarantee you any business out there is taking these card types. But manufacturing, wholesale, B2B take a significant amount of them. And so CardConnect has the patented technology that secures the level and 2, 3 rates because of the patented technology and using our system. They secure the level rates lower. So in some instances, it can save a business up to 20 to 90 basis points, almost 1% in fees when taking those business, corporate, and purchasing cards. So it's just something, it's a competitive edge that I have in our industry, and something that actually all my clients benefit from if they're using our any of our CardPoint devices, standalone terminals, even any of our direct integrations, our virtual terminal that we have in our hosted payment page for clients. They are guaranteed these lower rates on interchange. So that's just an FYI. There are businesses or processors out there that do have a competitive edge with this patented technology. It just allows the client to receive, the best possible interchange category rate, and the potential savings can be anywhere from 20 to 90 basis points. Will you be able to, will this PowerPoint be on your website, Joel and Jason? Okay. So these links that I've provided to you here are all the links to the card association's interchange tables. They're daunting. I don't know how many pages Visa and MasterCards are. Discover and American Express are not as long as because they don't have as many card types. But if you ever wanted to or had the time, you can. This is all information that's available. It's just probably never been shared with you, where you can go to the card association's websites and you can see the true interchange rates of all the different card types by industry on their websites. So, okay, perfect. Awesome. So I just wanted to include that in the presentation today. I did want to just speak to the role that banks play here. Banks, as I mentioned earlier, have to be members of the card associations, Visa and MasterCard, in order to have the Visa and MasterCard logo issued on the credit or debit cards that they generate. The banks are the ones that are taking the risk, so they should be generating the majority of the fees. So as I had in a previous screen, Visa and MasterCard get about 15%, and 85% of the fees that are charged on interchange are going back to the issuing bank. It's the largest revenue stream for banks, and they're the ones taking the risk. So that's the role that they play in this situation. I personally think it's a little bit of a conflict of interest that banks can issue the cards. They get paid fees for people if they're not paying their interest on balances each month. They're generating revenue because they're the ones issuing the card, and now they're going to charge you credit card processing fees. It seems like it's a little unethical that it happens, but of course our SEC oversees it and they think that it's fine. But I think it's a conflict of interest on a personal level. Just my 2 bits there. Okay, so here is the easy, simple little equation that you're going to be able to utilize each month. It takes less than a minute to determine whether or not you're probably being priced fairly or not. It's a very simple equation. And at the end of the day, I know that business owners, controllers, CFOs, bookkeepers, accountants, whoever is reconciling and overseeing this aspect of the business, they do not have the time to go through each one of those credit card statements each month the way that I do when I sit down and prospect with a client. And so a quick way to determine what your monthly effective rate is to take your total fees for the month and you divide it into the total volume. And that's something that you should be able to really easily see from your credit card statement. Again, if you're not understanding that process, please reach out to me and I can even take a phone call. I'll walk you through how to do it. But so let's just say that your effective rate is 3%. I think that's a magic number that most people feel that they're paying for credit card processing. If you are paying 3%, that's a decent effective rate. I do have clients that are less than 2%. They do a lot of volume, and volume definitely affects that effective rate. So if you're a business that processes, $20,000, $25,000 a month on a regular basis, your effective rate, even though there's going to be different card types, should not swing within 0.1% of that 3%. So say one month you might be 2.9%, and next month you might be 3.1% as an effective rate. A swing of 0.1% on either side is probably very normal because you're going to be accepting different card types. Card types determine your effective rate, volume affects it, and as do if you're issuing a lot of refunds and not getting the interchange refund to you when you're running those refunds, that can affect your effective rate. So it's a simple equation. I encourage you, when you get your monthly statement, literally your total fees and total volume should be somewhere on that first page. Simply just take the total fees, divide it into the total volume, and it's going to look like 0.0300. It's a simple movement of the decimal to determine that your effective rate is 3%. And I'm happy if someone has a credit card statement handy, we can look at doing that right over the phone here and get that effective rate determined for you. Okay, so something that is fairly new in our industry, and I'm just going to briefly talk about this. You may have been in a business, you may be doing this, you're seeing this more and more, where businesses are offering a cash discount, meaning that if you pay with cash, you're going to pay less than if you're using a credit or debit card. Cash discounting, surcharging, and convenience fee are all three different things. I have seen a couple of businesses in town say that they're doing cash discounting. Some of them are actually not doing it correctly, and I am not about to come in and tell them that they're doing it wrong. I get clients that they know that there's regulations. Visa and MasterCard, the card associations don't have laws, they have regulations. And I've explained to them what those regulations are, an overview. And I'll get a call from a client that says, so-and-so is not following the card association's rules. You need to go talk to them. And I'm not going to go talk to a business about doing that. I'm happy to go in and if they have questions, answer them for them, but I'm not going to go tell them that they're doing something wrong, if you will. But cash discounting, surcharging, and convenience fees are something that we're seeing more and more of. It is extremely important to be set up correctly to be able to do it, and that you're complying with the card brand's regulations in doing so. So it has to, for example, you have to disclose or have a sign posted in your business or on an invoice if they're paying that way that's disclosing that if they're going to use a credit or debit card, that there's going to be an additional percentage of a fee charged to take that payment. The government has actually for years been able to offer has been able to do a convenience fee. When you go to the DMV, you see it. The government entities have always been able to do that. This is something that's very new in our industry within the last couple of years, that businesses could actually do this. But due to the environment that we're currently in, you're seeing more and more businesses doing it to probably stay afloat due to the lack of revenue that's coming through as a result of COVID. So again, if you have additional questions about cash discounting, surcharging, or offering a convenience fee, reach out to me. I'd be happy to provide guidance. It is also on the Card Association sites. But if you're currently doing it and you're wondering if you're not doing it correctly, shoot me off an email and I'd be happy to provide some guidance that way for you. So this, just the final thoughts here, this breaks it down again, the effective rate. I'm just checking time here. Oh gosh, we only have about 5 more minutes. Figure your effective rate on a monthly basis. Again, you just take the merchant fees and you divide it by the gross sales to get that effective rate. Look back at a couple years of processing. If you've been with the same processing company, do it on an old statement from 2 years ago and see if that effective rate is comparable to an effective rate in 2020. And again, you'd want to do it on a month of where the volume is comparable. You wouldn't want to do 1 month that you're only doing $10,000 a month in processing and then do your biggest month when you've done like 75, because that's going to skew the effective rate due to the volume. Just a couple questions that actually Jason recommended that you look at when you're evaluating this. You know, is the percentage stable, growing, or declining in relation to sales? Do you know why? And when you work with someone like myself, and there are other people in the industry that can be trusted, that are knowledgeable, that will advocate and look out for you, but we're far and few between, unfortunately. And I'm not embarrassed to say that. I feel like I'm a ray of light in an industry that is fraught with corruption, that you need people like myself that advocate and do the right thing and take the time to educate and provide the customer service that you deserve. So work with someone that you trust. This is a list of the questions. And if I can send this, Jason, out to you and anyone that participated today, or Joel, just so that they have it, I'm just going to review it. These are great questions to ask if you're a new business signing up for credit card processing for the first time, or in your existing business and you're looking at changing processors. Do you have to sign a contract? I don't sign any of my clients in a contract. If they're not happy with my services, there's no termination fee. They can get out of the agreement by calling in and saying that they're canceling their account. Make sure and to find out the pricing model that's being used. We are seeing more flat rate pricing out there. I'm not discouraging you not to use it. I personally, just because I'm very analytical, I like to see true interchange plus pricing, so you can see exactly what is being paid to the card associations and then what your processing charge is on top of that. Ask if all processing charges are transparent and disclosed. You know, there's sometimes junk fees that are added in there. A PCI compliant fee or a non-PCI compliant fee, when you don't even know what non-PCI compliant is, I consider that a junk fee. I think it's the responsibility of the processor to educate you that you need to get the PCI compliance done on an annual basis, and they should assist you or at least provide a resource in helping you get that done. Ask if they do increases, or ask them how long your rate is good for. Find out if they're a direct processor. There's only a handful of direct processors, and those numbers are declining. I worked for Heartland Payment System for almost 10 years. They got bought out by Global a few years back. Like I said, First Data is now part of Fiserv. There's only 7, I think, direct processors currently in the industry. And when I first got in, there was probably about 13 or 14. But there is thousands and thousands of resellers selling these services for direct processors. And when you're working with a reseller, that's a middleman. There's a layer of cost there that you wouldn't have to pay if you're working with a direct processor. So ask, ask who you're working with, know if they're a direct processor or not. Make sure you always get an original copy of the paperwork that you signed. Ask how many basis points on top of interchange that they're going to be charging you. Is there a transaction fee? Is there a monthly fee or a statement fee? Will I be charged a non-PCI compliance? What is compliance, and will you assist me in completing it? If you start to ask these questions, the people that you're working with are going to know that you have knowledge about how processing works, and hopefully they're going to be more transparent with you. So just these are the list of questions that I think you should ask. You don't ever, I strongly encourage one thing that I hope, if you don't take anything else away from this presentation today, don't ever, ever, ever lease equipment in our industry. It is the biggest mistake that I see. They're 4-year contracts that are non-negotiable. You cannot break them. And I've seen people get charged anywhere from $25 to $100 and some a month for leasing their credit card terminal, and a brand new credit card terminal is, $200 or $300. So at the end of the 4 years, you could have owned 10 credit card terminals, and it's a racket, I think, in our industry. I wish that our industry wouldn't even offer the option to lease equipment. And if they tell you that they try to convince you it's the way to go, because if the terminal breaks down, that they then replace it, you'd be better off to just buy a brand new terminal for another $200 or $300. And I encourage you to work with a processor that's local. I mean, and when I say local, I mean anyone within the state of Montana, so that you can call someone when you have questions or concerns or there's issues and get things resolved in a timely fashion. So that kind of really just goes through the, an overview of helping you to try to understand credit card processing. Because of its complexity, I'm sure you do have more questions. Please feel free to email me. I'm happy to help you understand and educate you and answer questions for you to make sure that you're set up and have the right processor in place to meet the business needs. So that concludes it. Is there any other questions?
And I'd encourage everybody, if you want, you can type a question in the chat window, or if you want to unmute and ask a question, that would be fine as well. And maybe while people are thinking, I'll mention something here, and I'm glad you put it on the slides. I forgot to mention our sponsors when I did the intro. So we do have the U.S. Small Business Administration, the Small Business Development Network here in Montana, Montana Department of Commerce, MSU Extension, Montana Economic Development Association, Grow Great Falls, and the University of Montana all help make this series possible here to do. We do have a question that's come in via chat. And Stephanie, are you able to work with webhooks integration for accounting software?
That is something I'm going to have to research, Kelly, and get back to you on. It's off the top of my head. It's not something I know if we have a direct integration, but I know we do. So I'll give you a call.
All right. Other questions from anyone? And if you could advance the slide, Stephanie, one more.
Oh, you bet.
I added one to the end. Oh, there we go. That's the one I was looking for. We are scheduled through for next month as well on December 3rd. You're going to see Jason Nitschke. And he's on here today if he wants to provide an extra promo for his session next week. But on December 3rd, he will be discussing engineering growth in the wake of COVID. So mark your calendars for that one if you have not already done so. Any final questions for Stephanie? Well, Stephanie, I want to thank you for sharing your knowledge. I know I learned a few things. Hopefully those that were on here live learned a few things, and I'm sure that many that watch the recording will also pick up new things. Did you have anything you wanted to leave the group with, Stephanie?
No, I just appreciate the opportunity. And again, I encourage any of the advisors, the business advisors that are on the call today, going forward, whenever you get these kinds of questions, please point them in my direction. I'm happy to provide guidance and assistance. And I'll just use like Kelly for an example. I mean, we may not be able to work with webhooks integration, but I'll be able to provide guidance to help him to customize the solution. So if that's how he has to utilize webhooks, then ensure that he's being priced fairly, set up correctly. I'm not opposed to helping other people, even though they're not going to be a client of mine. That's where the advocacy comes that I so enjoy. The teacher in me really enjoys that aspect of my job.
All right. Well, thank you very much, Stephanie. And thank you, everyone, for joining us. And I hope you'll join us again on December 3rd. Have a great day, everyone.
Great. Thanks, Joel. Thanks, Jason.